So the rate of exchange is needed to convert foreign currency into INR, especially when we are filing income tax returns or even claiming the foreign credit refund and other source, and then filing the returns basing on different sources of income. So the rate of exchange, when as per Income Tax Act of Rule 115, is the telegraphic transfer buying rate of the foreign currency specified on a date by SBI. So SBI will publish the telegraphic transfer buying rates for the specific currencies. We need to look up to that and use that as a part of filing income tax returns. And of course, there are various sources of income, and and then they have different reference rates. I will go through that in detail. So, for example, if your nature of income is salary, the reference date to select for determining the conversion rate would be the last date of the month preceding the month in which the payment is received. So, for example, if you are receiving for the salary for the month of February, so it would be the last date of the preceding month, which is in case here would be the January of the month. We will look at detailed examples as well. In case of interest income means income from securities, or income from, for example, a debenture or something like that. And the last date of the month immediately preceding the month in which the income is due for. For example, if the debenture is getting due in the month of June, the date to consider would be the date preceding it. So it should be the May month for the interest income. So it is different in case of income from a house. Let's say if you have a house property and then you are deriving income from a foreign country on the house, then it would be the last date of the previous year of the SSC, and it has some exceptions. So typically it would be, for example, if you're filing for the year 2023, then it would be the preceding year's last date. So which is like 31st of December of the previous year. And in case of dividend income, it would be the last date of the month preceding the month in which dividend is distributed. So always remember, in case of dividend income, it would be the date on which it is distributed is considered. So the last date of the previous month shall be picked up for exchange rate computation. And in case of capital gains, it is also the last date of the month preceding on which the capital asset is transferred. For example, if there is a buy or a sell, which is called transfer of the capital asset. So a month before the last date of the month where the transfer has happened has to be considered. So let's look at the detailed examples. In case of salary, so here if you see a salary of $5,000 for the month of February is paid on 1st of March. So the payment has happened on the 1st of March. So the conversion date would be 28th of February 2023. So a date, actually the credit happened on 1st of March. So you are considering the previous month's last date for picking up the rate of exchange. In case of dividend, let's say the dividend is received on 30th of July, then the telegraphic transfer rate should be considered is 30th of June 2023. And in case of capital asset, if the asset transfer has happened on say 19th of June, so the telegraphic transfer rate to consider is the last date of the preceding month, which is May, 31st of May 2023. And the telegraphic transfer buying rates are published by State Bank of India, and you would get that rate card available on the website directly. You can type even in Google, if you go to Forex rate conversion space SBI, you would get on the first link itself the rate conversions for the corresponding currency, and you can use that currency conversion rate for filing the exchange rate. This is very useful when you are filing income tax returns basing on foreign currencies,